again and welcome. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Thank you for joining us for our Friday Insights edition. Today we're going to look at the Rule of 72. In fact, Albert Einstein called it the eighth wonder of the world. He said very famously, those who understand it earn it, and those who don't pay it. And what he's talking about is the power of compounded interest. In fact, the real rule of 72, and you can have some fun with this at home, just take out your calculator and it's real simple. You basically take the interest that you're going to earn, or the interest that you're expected to earn per year, right? And in this case, let's use 72 divided by, you just divide it by the interest, divided by 1%. Let's say the bank right now is paying you 1% on your money. You'd be lucky if that was happening, but see how long that money in the bank right now would take to double. You take 72 on top, divided by the 1% expected interest rate, and you don't need a calculator for that. You know it's 72 years. Now, to make it more interesting and more common in terms of the world of investments that we see with regards to managing properly and getting a little bit higher rate of return, if you want to position a balanced portfolio, you could potentially say, let's pretend you get a 10% annual rate of return. How long would it take for your account to double in that case? Well, if you have an expected rate of return for 10% each year, you just take 72 divided by 10%, and it's 7.2 years to double your account in that investment account. What's interesting about that and why that's important is in the early years when you're younger, you want to front load as much as you possibly can, because over time, your money will start compounding quicker and faster. And if you could achieve a 10% rate of return, oftentimes we do see that. From time to time, over time you see this compounded interest work in your favor, just like Albert Einstein said. Now, why we're talking about this is very important because we love to educate. This video, if you want to share it with friends and family, specifically kids and grandkids, please do so. I mean, I'm going to have my 4 kids, my teenagers, watch this a little bit later. And what's important is the one question you want to ask, get this concept rolling and get somebody thinking about it a little bit differently is, and it's a simple question, and you can also look this one up too, or look at the notes in this video afterwards. And what's interesting is what you could say is, listen, would you rather have $100,000 in your hand today, I'll give you $100,000, or would you rather me double 1 penny a day for 31 days? Now you're saying, wait a minute, it's just a penny. How is that going to work out for me? Every day, the penny goes from 1 penny to 2 pennies, 2 pennies to 4 pennies, 4 pennies to 8 pennies. At the end of the week, you're still scratching your head, sort of saying, you know what, I have buyer's remorse. I probably thinking I would have taken the $100,000. I would have been so much better than, let's say 8 or 16 pennies, right? Just let it work for you and just keep playing it out. So it takes you about over 20 plus days, 28 days to get to the million, but watch it. On the back end, right? The last week and a half that you're going to see. On day 30, you're at 5 million, over 5 million. At day 31, you're over $10 million, the power of compounding. Again, what Albert Einstein was referring to. So would you rather have the 10 million in one hand or the 100,000 in the other? And that's what it is. It's sort of opening your mind up to thinking bigger and letting your investments work for you, and more importantly, let it compound once it's there, because you put your hard-earned dollars there and just let it keep doing its thing, the eighth wonder of the world. Now, for planning purposes, for us, we love to talk about this concept. Obviously, the rule of 72 works. If you get a pretty good rate of return over time, you could see accounts double. But more importantly, for kids and grandkids, invest while they're younger. The great-grandkids, the grandkids, we're opening up investment accounts left and right for just that purpose. Why? Markets are down, right? Year to date, we don't have a solid start. But at the same time, there's a lot of quality that's on sale, as we say. So could you receive a higher rate of return on a go-forward basis and then use the power of compounding while we seed and open up an account for your great-grandkid for their future? And right now is the time to do it. We're doing that all day long in terms of what to do in times like these, and we're looking towards the future. And we're also using the power of finance, the eighth wonder of the world, the power of compounding. So talk to us. We're happy to help you. We're happy to set these accounts up, and we're happy to position the investments where we believe would be great for the future. And that's another way to stay ahead of educational expenses and inflation, and take advantage when the market's on sale, because the future is very bright, especially for the ones that we love, the little ones. So I hope my kids watch this today. I hope they're going to follow the power of 72 and play around with it on the calculator. Also think about this, 100,000 in one hand today, immediate gratification, or be patient, invest, and wait, and let your money work for you. So that's our update for Friday Insights today. Thank you for watching. Like and subscribe and share all the time. Have a great weekend.